Hi everyone, welcome back to Be Rich. And I wish I could have brought Anand in today, but unfortunately he was busy and I was not able to pull him in. But we broadly spoke about what I should discuss with you guys today. Believe it or not, in each video, Anand does go through what I discuss with you guys, and he gives me pointers on what I can talk about, what I should try and avoid, and what his opinion is about these things. So he does have an eyeball on this. Don't assume that Vinod is just going and pulling something out of thin air and he's just faffing away because Anand is too busy. I do understand the frustration some of you do feel because you are big fans of Anand. So am I, and you do wish that he was here, and so do I. So that all said, let's move into the topic of discussion today. So what do I want to talk about today? Today I want to talk about the American stock market and some defensive plays you guys can take. Defensive plays are defensive stocks, companies which tend to do well or not suffer as badly as when markets correct, because it seems more and more imminent as we are seeing the American market and the broader global markets that we are due for some kind of corrections in the coming months. And the way the Israel issue is playing out, it's going to lead some further corrections down the road. So that being said, I thought we can look at some companies which I feel would probably do reasonably well in turbulent markets. The first company which I want to talk about is an insurance company called Aflac. Is an insurance company that specializes in supplemental insurance. Supplemental insurance is that you already have a primary insurance, and this is an add-on to that insurance. And that supplementary insurance policy they provide is mainly on cancer policies. They're well known for this, and their revenue comes mainly from the premiums from these policies and other investments they've made. They target people mainly at work sites and strong emphasis on customer service and claim processing efficiency. That's why they're only present in US and in Japan. So being in a Japanese environment, you can be rest assured their efficiency and turnaround on customer service should be pretty good. And what are their strengths? They have a very strong brand recognition and efficient claim processing, like I said, and they provide supplement insurance. But that supplement insurance being a strength at the same time is a weakness for them, because supplemental insurance is a limited insurance product. It does not offer a main insurance like the primary insurance, like a healthcare. Like I said, you have a healthcare and there's an add-on to that. It's like having a top-up plan. So, and they're heavily reliant on the American and Japanese market. The flip of that is they have opportunities to expand into new markets and diversify in the insurance products, which right now it's not on the cards, but it's there. The opportunities for them are there for growth. Threat for them is the economic downturn. If the recession comes in or a global downturn happens, disposable income goes, and one of the first things people stop paying is their insurance premiums, because people feel that insurance premium is a luxury. And I don't think it is. I think it's a very critical thing, especially during tough times. It's better to have some insurance rather than have no insurance. But I do understand when families do struggle to pay bills, one of the first things they let go is paying the insurance premium, saying, okay, we'll see when times improve, we'll look at insurance again. The other weakness and threat for this company could be regulatory change. If there's a regulatory change from the American government, it could have a roll-on effect to Alfac. So this is the first company which I was talking about. And why am I saying it's the reason to looking at buying this company, why I would look at studying this for the company, is right now the valuation is very good. And it's trading at a 27% discounted rate to the fair estimated value by most analysts, and has a very good economic moat, and it has a very strong competitive advantage, and in a market downturn, it should relatively correct very less compared to the broader market, is what I feel. The next company which I want to talk about is Kroger. It's a retail grocery outlet, and they operate supermarkets and multi-department stores and jewelry stores and convenience stores across the US. Most of their revenues comes, of course, through sales of groceries and general merchandise and fuel. And they focus on customer satisfaction and competitive pricing. And their online services keeps them also competitive. Now, looking at the SWOT, I would say the strength is the large network of stores that completely cover the east to west in the American continent. And they have a strong private label brands, and they have a very good online robust services. There is intense competition in the grocery sectors, and the margins are very thin in the retail industry as a whole. So this is a weakness for them. Opportunities is to expand further into online and deliver services online and improve their logistics And greater focus on organic and health food focus is something which they can do, because that seems to be where the market is heading right now. The main threats is online disruption, because more and more people are going to online, and due to the pandemic, change has been far more swifter and stronger. So this is something to think about. Then, of course, fluctuations in commodity prices is going to be a problem for them. If global logistics are disturbed due to this ongoing tension in the Middle East, if the Suez Canal port is in trouble, like we saw when the traffic jam happened a year or two back, it led to disruption. That also can lead to disruption. Disruption in oil, the oil market, and the free flow of oil can also have a knock-on effect on commodity prices, which can also be a problem for them. Right now, they're trading undervalued, so they're discounted about 27% from their fair value estimate, which is a good price to be at. And even in an economic downturn, something all of us still need to do is continue eating and continue feeding ourselves. And since them being present in this, I do feel it is a good opportunity to look at. The next company which I wanted to talk about was NewSource. NewSource is a company which is primarily in utilities. They engage in natural gas transmission, storage and distribution, and as well as electrical services. Most of their earnings come through the distribution and transmission of natural gas and electricity. They currently are focusing on, the strategy seems to be being on sustainable and clean energy and trying to reduce carbon emission. And they're working on enhancing that infrastructure. So what is the SWOT for this? Their strengths are diversified utility services, focused on sustained and clean energy. Main weaknesses in regulatory constraints, as I said, and the dependency on market demand and commodity prices. When oil prices fluctuate, naturally gas prices also fluctuate. So this has a roll-on effect onto them. Opportunities is, of course, expanding and investing more on renewable projects, and expanding on the services in a growing market. The threat for them is, as I said before, economic fluctuations and changing environmental regulations. The reason why this is a good defensive pick is because right now the company is discounted by 24%, and it's in the utility sector. And like I said before, even if a downturn happens, people still need to have energy consumption. So that's not going to go away. So even if the broader market, like I said, corrects, this should correct marginally compared to the rest, because we're already down at 24% discount. And it also offers a dividend yield of around 4%. So this is also good because it offers a good dividend yield. And in the long term, there's also growth prospect, considering where they're at right now. The fourth company and the final company I want to talk about as a defensive buy is a technology company called Microsoft, which I'm sure all of you know. And like I spoke in the previous video, Microsoft is rapidly expanding in AI, and they seem to have created a revenue model which might click in for them in AI. And if that does go through, it's going to be a huge win for them and the whole industry as a whole, because there's going to be more adoption of AI and revenue streams opening up for a lot of companies in AI. So the main strength for Microsoft, of course, is their brand recognition and market position. And they have a diverse product range from hardware, software, gaming, you name it. They're present in most things. And they have a very robust cloud services, which we spoke about in the previous video. The main threat for them, I would only say, is cybersecurity risks and rapid growth of technology requiring constant innovation. Like I said, Apple right now is stagnating. And 2-3 years ago, we couldn't have imagined Apple being so stagnant, especially when they launched Apple Silicon at their event, I think 3 or 4 years back, when they announced it, of letting go of Intel. That gave Apple a real boost. From that point, they've not been able to innovate and keep growing. And even with AI, they seem to be lagging. Anyone who's used Siri and compared it to Google or compared it to even any other product offering in terms of smart assist, Siri is still lagging way behind. So that way, Microsoft does have an edge. But that also seems to be the threat, because if someone from the blindsides them and innovates something drastically new and comes into the market with a lot of force, it can knock Microsoft's wind out of its sail. Microsoft's strategy for always dealing with this has been moving and buying them out, and or if not outright buying them, to invest and hold a position in them so that they have a stake in this. They've learned a lot from the previous mistakes they've made, and they're not trying to monopolize anything anymore. So what they do is they hold 49%, 48% holdings and they sit over there. So they're pretty much the largest minority holder in that company. That seems to be their strategy right now. So all this considered, I think these 4 stocks are a great defensive position you can look at being in, especially with the market correction which is expected to come. And it has already started to trickle down, especially in India. We have seen series of market moves where FIIs have been pulling money out in droves. We saw it happening with Natco Pharma, and we saw it happening in Tangavel. So FIIs are busily pulling funds out of Asia as a whole and even in India. Anand also spoke about it in Paisa Bolte, where around $27 billion has been pulled out by FIIs from Southeast Asia or South Asia. And out of that, India's contribution has been around $3 billion. So, all said and done, this is what I suggest you look at, considering the fact we're in the macroeconomic situation the world is facing right now. I would suggest that you stay defensive and look at companies which have a strong moat and have who are currently undervalued. So you have place to maneuver and stay in these positions, at least for the medium to long term. I hope you enjoyed this video. I hope you found it informative and entertaining. If you do like these kind of videos where I talk about stocks and shares, please let me know in the comments below. I'll try and cater to that more. Thank you for watching the video today. Do share it, like the content, and I'll see you in the next one soon. Thank you. Bye.
Those who are desirous of meeting me can meet me in Kuwait on the 24th of November, the last Friday of November. After a successful meeting in Hyderabad, my team wanted to do an event in the Gulf again. It has been decided to do it in Kuwait, and hence I am there on the 24th of November, the Friday. Thank you. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.